Hello everybody, it's Steve here, and we have had another continuation on the uptrend that we've been seeing for all of this week so far. Um, like we were discussing last time and the time before that, I made some adjustments to this whole experiment thing where I'm using an actually completed, mostly script um, based off of a heavily modified MACD. When I say mostly completed, I mean that it does go off of the indicator itself um, for the most part. Like it'll be the like bar after when we have a cross under here, as indicated by the histogram. Um, but what I want to do with this whole thing is add some more quality of life features once I get around to it. Like for example, I want to try experimenting with seeing how it would work if I add in confirmation signals and a take profit and stop loss built into it, because I've seen a number of strategies on Tradingview and the like, and a couple of trading channels on YouTube that I follow to get ideas for new things to try out and experiment with. Or there's one guy who does pretty much just forex and stuff. You may have seen his videos. I think his channel's the Trading Rush or something like that. But anyway, his whole thing is that he tries out just using indicators while doing forex or whatever currency pair he's working on. Or I don't think that I've ever seen him do cryptocurrency, but I can't confirm that right now. But anyway, one of his things is that he doesn't take an entry signal unless it's on a certain side of the moving average. I believe he uses the 50. He might use the 200, but I'm leaning towards 50 on that. And it's the EMA, not a simple moving average. But anyway, so yeah, I want to add some quality of life features like that. Maybe see if I can add in some of my own ideas and kind of flesh it out a little bit, so it's not just a your standard MACD indicator, which, like I said, this is very, very heavily modified, but at the same time, well, it's still MACD. There's still the underlying principle with how it works. So anyway, moving on to how we've been performing. So when I made the change, we were down to 59,000 from a total of 100,000, and that was after like 5 trading days. So yeah, the incomplete script did not perform like the strategy tester on here says that it does, which I always take that with a grain of salt anyway. But for those of you who are interested in doing backtesting stuff with Tradingview, the strategy tester by itself is useful in near term, but if, for example, like if we're looking at the S&P here, we go list of trades. Yeah, it goes all the way back for 2009, and this is on the 8-hour. Like if I went to like the daily, it'd go back to I believe like 1999, somewhere around there. Which the E-minis I believe only launched in '97 anyway. But anyway, moving on there. So we are on the 8-hour, which is what I like to do with the S&P. And we are still long since our little signal there. Although if I was going by my original oscillator, see, that's one of the neat things about this is that, yeah, in this area we would have gotten shaken up a little bit, but we would have gone short at around, let's see, where did it close? Whenever I estimate stuff, I do with the close price, 46.13 and 75, and then we would have been long again at 45.83. So that literally, we would have taken a minor loss unless we were, that might be a crossover above 20. Don't know. That's another discretionary thing. Like, if you think that it's going to end up above 20, then by all means, then go ahead and go long. But the result pretty much would have been the same. Actually, would have been slightly worse because we had a red bar here. But I digress. Anyway, so back to my original thing. That's one of the neat things about the 8-hour is that this is a signal to go long at 2 a.m. So long down here at 45.83, and now we're up to 47.16 and 75. So that is a pretty nice gain for just going off of an oscillator without paying attention to any of the price action. Speaking of price action, this is what I would consider a pretty significant level here, around 47.20, because we've gone as high as 47.40 ish, but keep getting smacked down. So who knows? This is, most people will either do like short-term time frames, or the daily or the weekly when they're looking for like double tops or triple tops, or head and shoulders, whatever. I don't really trade off of patterns that much as it is. I know some people who swear by them and swear by all kinds of different candlestick stuff, but I prefer looking at supply and demand, just support and resistance. There are a handful of patterns that I like. I like bull flags, bear flags, things like that. Anyway, I am rambling. So far we're doing pretty good on this. We are sitting on a gain of about 40 points there, and that's not bad. So moving on to the Russell, which we are also long on the Russell. Same thing. Would have gotten in a little bit earlier with the stochastics, but it's been a pretty rough time to be using that oscillator during this downtrend. The MACD would have worked better, and to be honest, even just like just a regular moving average in this case would have done better. But again, I didn't design this for the Russell. I didn't put in the parameters for the Russell. I changed everything for individual stuff as far as when I'm trading my actual live account. Like today, I was trading the E-minis, and I was using a 2000 tick. It's called a tick volume chart, which is pretty good. I like those because they help with my overtrading problem. If the market's just moving sideways, the nice thing about the tick chart is that if nothing's really happening for a long period of time, it's just not going to print bars. Like, it just doesn't happen. And then with the sell-off that we had at the very end of the day here, if I was trading off the 5-minute chart, just doing indicators, like, it was like a 14-point drop, I believe, over the course of one bar. Whereas the tick chart was way ahead of that. It was like on par as if you were trading like the 1 minute. But again, the 1 minute I tend to heavily overtrade, so I don't touch that. It's just not suited to me personally. You have to account for your own weaknesses when you're doing this, otherwise you're just going to lose money. But so anyway, yeah, no, the way I was describing it to a buddy of mine was that when the massive sell-off just kind of started happening right at the end of the day, the tick chart was just like, all right, guys, party's over, so either short or get off the boat. Whereas the 5-minute chart would have been like, well, whoops, there goes 14 points. Better luck tomorrow. But I don't like relying on luck. I like probability. And so the tick chart, it suits me very well. And it did very well for me at the open, because I was able to get in. I bought one contract at 46.99 and 50 cents, and rode that up until it hit my second standard deviation of my VWAP, and that was when I closed that position, and then I was just scalping the rest of the day. It was a very boring day after that, because it was very sideways up until like the last 10 minutes, and that's when we had the sell-off. So moving back to the Russell here, yep, still long, up $2,000, it's not bad. On to gold, long on gold, better late than never. We had that long signal at 17.83. Would have been nice to hold that up to here, but I don't think that I had actually started this experiment yet on that day, so it wouldn't have mattered anyway, even if I was using the original script here, which would have had us in and out, not doing too good. Silver, more of the same. We are long, and we are up 1900, so not bad. Copper, we are long, And again, a little bit higher than we should be, but no big deal. Crude, we are long. Crude, I've always had a pretty easy time with trading. I've mentioned before how I'll do my long trades on the daily chart, just literally just using this oscillator for example. I'll just throw that on the daily real quick to show you. Like I literally had my long signal here, because you can see that that's just like barely above where it would cross out of the oversold territory. So that's literally a close of 67.54, and I rode that up until it hit 80 and 86, roughly in that area. I got in like the mid 78, or sorry, the mid 68, and then closed at like just above 80. And then I was shorting until right around, I sold like halfway onto this because I was just like, well, how hard is this going to bounce? Turns out it wasn't going to bounce hard for another couple of days. But, you know, that's another thing psychologically that you got to watch out for if you're a newer trader, is that missing out on gains is not the same as losing money. You might be kicking yourself being like, oh, well, if I'd taken that trade, I would have made blah, blah, blah. Well, you know, it could have just as easily gone the other way. You could have gotten in at the exact wrong moment, which I have certainly done more than a few times, especially day trading, because I tend to be impatient. That's another problem I have. But enough about me. On to natural gas. Natural gas kind of tanked today, and we were long. And if I was following that oscillator, I would have shorted. Well, I'm going to move to the daily, because I believe we were doing the daily on this one. Yeah, still in this whole bottoming it out area, so 8 hours, whatever. Anyway, so we've rebounded a little bit off the low here, but we're still in this range. So this is a pretty solid support level, especially considering how high we've gone since the beginning of the year. Of course, this was a kind of a weird year for natural gas because of the ice storms in Texas. I haven't looked into the data, so this is just speculation. But normally the price doesn't really start rising until like the end of June-ish. At least as far as like the where there's usually like a rally into the beginning of September, and so that's when I like to start accumulating. However, this year, if we go all the way back, just gonna move this up to 1 day so I'm not scrolling forever. We go all the way back. We're down in the mid 2 range, up to 3.25. Which, like I was saying, this is the way that I've been playing this for ages, is that I start accumulating around here, because this has been typical for like the last 4 or 5 years that I've been watching natural gas, is that it'll be really, really range bound, and so I like to accumulate at the end of June, and then towards the end of July, it just starts to rally. And like I said, it's right into the beginning of September. That's what usually happens, and then it gets super volatile, and then it's really, really choppy. Still pretty good for day traders, though. This is a pretty good daily range on most of these, but it gets really, really choppy, and then tends to peter off. However, we had that whole situation with the ice freezes in Texas and all of their pipelines and all that, and I believe that a lot of our natural gas comes from Texas. Don't quote me on that. But I feel like a lot of people were expecting that sort of thing might happen, so they wanted to have natural gas on hand, maybe producers, maybe there's a supply crunch, I don't know. I have not been following the macro news on this. That is just my speculation. But anyway, yeah, no, I like natural gas. If you're not careful, it will destroy your account, though. Because I don't like the mini contracts, because there's not nearly enough volume on them. I just don't like trading them, because I like being able to get in and out within like 1 or 2 ticks if I'm doing a market buy or market sell, as opposed to doing limit. And the few times that I've traded the minis on natural gas, I've been able to get in close to what the bid ask was, but it took time because there's like nobody buying because the spread value is much larger than on NG. It's like it's done the same way like the E-minis on the S&P are, where it's you know 4 ticks to a point. Whereas with natural gas, it goes in increments of well, as you can see, 001. So if natural gas is moving in like a tight range, then the E-mini of natural gas is just not going to go anywhere. Anyway, so not sure what I'm going to do with this one yet. I'm going to keep this one long for now. Um, if it breaks down, if we get a short signal here on the MACD, then by all means I'll take a short, because we're still a ways higher than the range from last year was. Like I said, it was like 2.5 up to 3.25 before it really started rising. So on to the bonds, and as I keep harping on, I am not bullish on Treasuries at all, and we've been in kind of a narrow range on this as well. Well, not narrow, but we're kind of range bound. We only just really started recently, but this short position of plus $31.25, absolutely fantastic for us. Should be doing better, but I had to make that adjustment. The oddly enough, the T bonds are doing much better for me, which I think that I was griping a little bit in the video a couple of days ago, because I was just like, yeah, I don't know how to trade this. I've never traded the T bonds before. I'm usually more of a 2 or 10-year Treasuries guy, if I touch it at all. Speaking of which, I haven't touched the new micros yet. Just like with micro crude, I want to kind of let it actually get some volume. It doesn't have a whole lot of that yet. Crude mostly picked up pretty quickly after a few weeks, but I want to have kind of a track record so I can actually plot a chart here. Plus the micros, they trade as an inverse of the actual interest rate data and all that. So they're kind of weird in that sense. The only one that I've seen that actually has any reasonable volume so far seems to be the 10-year. The 2-year, the 5-year, and I believe the either 20 or 30-year, one of the two. Actually, it might be both of them. I don't know. I haven't really looked at them apart from I made a post online on social media at one point in a trading group being like, hey guys, this is a new thing. I don't like them yet. So, but you might have fun. But, yeah, no, speaking of the treasuries, the micro treasuries not having any volume, that's one of the things that is one of the reasons why I don't trade the smalls at all. Like the small exchange, they have a bunch of stuff on there that, like, if they had narrower spreads and more volume, and the contracts would actually go out farther than literally just 2 months on all of them, unless they've changed recently, then I think that they would be super super viable. What they're advertising them as is that they want to make futures as accessible to as many people as possible. And that's fantastic. I absolutely love that idea. Lower commissions is great because I overtrade. Having lower margin values is fantastic. Being able to scale in and out and more precision, absolutely great. And also, novice traders will be less likely to destroy their life savings quite as quickly. But they're just not there yet. And that's one of the things. Like, I was giving them the benefit of the doubt for a while, but then the CME released the micro crude, and that took off pretty quickly. So I'm just like, what are the smalls doing here? Are they just not advertising? And then there's the Bloombergs that actually just released. I forget exactly what the exchange is called. They also have a weird symbol. It's like B5 or something like that. Let's see if we can punch that in real quick. Could have sworn that's what it was. Yeah, the Fair Exchange. I don't know why it didn't show up when I typed in B5. Anyway, they got these, and that's weird though because this is futures and also not agriculture. So like, and it's still closed at weird times, at least according to TradingView. Um, the Bloomberg ones actually kind of have a reasonable amount of volume to them. Not so much for day trading, really. They still have some gapping, and the as you can see, the spread here is still 7 cents. Of course, these are like really small contracts, though. But so far, the Bloomberg stuff on the Fair Exchange, I think that they also just released one that was also micro crude, and I was kind of confused by that because it's got like the exact same values as the micro crude that the CME has. However, it also has higher margin requirements and lower volume, and the only real advantage is that you save like 20 cents or something like that on your buying and selling as far as the clearing goes. Uh, so I'm not really sure what they were aiming for there, but at least in my opinion, for now, stick with the CME until that really like has a chance to find its legs if it ever does. Um, but the Bloomberg stuff so far, they have, to my knowledge, 5 contracts. They may have added some. They're still a fairly new exchange. I only found out about them because I use Tradingview, and it shows up on the Twitter feed whenever they add new stuff. They have large cap, a micro and nano, and tech micro and nano. So they're like trying to be even smaller than the MES and MNQ. Nothing on the Dow, but that's fine. Who cares? Uh, anyway, I have rambled enough. I will keep you all apprised of any further changes to our portfolio here. With any luck at this rate, we will actually be in the black by the end of the year. Probably not though. 30 grand in another 8 days, and most of those are not trading days. Well, like half of them might be. But anyway, I don't see that happening. But we're making a comeback here. Um, as I've mentioned before, I've been able to pay my bills doing this without having to really worry too much for a few years now. I used to trade a lot of stocks. I still do passive portfolios for long-term stuff. I got into options, won some, lost some. I was decent at that because I have an extremely low risk tolerance as far as my own money goes. So like for silver, I remember I mentioned this in another video. I bought $150 worth of calls back when it was like 16 and 50 cents an ounce, and then it shot up to like 24 and a half, 25 and a half, somewhere around there. It was the mid 20s anyway. This was in, I think, either 2019 or 2020, one of the two. But yeah, my $150 turned into about 1350, and it was just like a month and a week to expiration the day that I bought it, and I held it for like 3 weeks, and then it just like shot up, and that was fantastic. Um, Most of the time, I was just doing the wheel strategy, selling cash secured puts, getting assigned, and then selling covered calls, rinse, repeat. Because I used to have this obsession with just getting enough passive income to just live off of dividends and all that. And turns out that's really difficult to do. Even with the wheel strategy helping you out, it's just um, it's definitely a very safe strategy, and it's the one that I recommend to anybody who wants to get into options. You're not going to lose your shirt doing that unless you're really unlucky or particularly bad at doing it. Um, but yeah, no, covered calls, cash secured puts, that is like the least likely way to destroy your life savings with options. Not like the stuff Wall Street Bets does. I love those guys though; they're crazy, um, fantastically hilarious. And when they did that whole short squeeze thing with GME and made that one hedge fund, I forget exactly what it was called. Um, they lost. That hedge fund lost like billions of dollars, and that guy, Deep Fucking Value, got called before Congress to ask what was going on and all that. Um, no, it was a good time. It was hilarious because as much as I do love trading and all that, that kind of thing is still hilarious to me. I really appreciate the little people sticking it to the man. Um, but I'm gonna cut this off for now. I've been yammering on for long enough. Like I mentioned in my very first video, as I get more comfortable doing this, I have more to say. And hopefully I will stutter less. Yesterday, I was stuttering fairly badly. The day before that, I wasn't feeling too good. And towards the end of the video, I really had to go to the bathroom, and so I started talking faster and faster and faster about the bonds of the portfolio. And it was like, all right, that's all. Bye, guys. So yeah, no, that's it. Have a good one. Hopefully somebody finds this entertaining. Maybe I'll do some day trading live in the future, and that'll pretty much only just be the S&P, E-minis, and maybe oil. I'm not that great at day trading on other stuff. You really have to find a niche and get a feel for how things move. That's kind of key in this business because everything trades different. And I'm comfortable with energy and large caps, and not so much with the small caps. But I'm doing really well with the Russell somehow. It's probably just because the Christmas rally. Um, but yeah, no, that's it. I will see you guys tomorrow. Probably not on Christmas though. But yeah. All right. Have a good one.